Welcome back. I'm Laura Noonan from the Financial Times, and I'm joined here virtually by Bob Diamond, who lots of you know as the former CEO of Barclays, and who's now the founding partner and CEO of Atlas Merchant Capital. Thank you so much for joining us today for our interview and for the event so far. We have about 25 minutes for this. It will mainly be a fireside chat, well, virtually between Bob and I, but we also are very keen for your questions. There is a Q&A chat box, which hopefully most of you have found, where you can log your questions throughout the session. We also have a Twitter hashtag, which is hashtag banking revolution, if you would like to log questions there. Bob will hopefully be joining me on the screen any second now. Hopefully, yes, there we go. There's Bob in New York City, who's joining us from his office. So Bob, thank you very much for joining us here today. It's quite a big topic we have. We're looking at crypto tokenization. Is it an opportunity or is it a risk for society? So I guess we hear a lot of chatter about crypto, and even in the last few weeks alone, we've had the CEOs of two of America's biggest banks offering very different perspectives. We had Jamie Dimon, JP Morgan Chase CEO, trashing crypto again, effectively saying he thought it was worthless. And then we had Morgan Stanley CEO James Gorman saying that crypto isn't a fad. As a former bank CEO, where do you stand on the Jamie to James spectrum?
It's a complicated space. So my answer to that, Laura, first of all, thank you for having me on, and it's great to see you, Laura. But I think my answer to that is it's possible they're both correct. There's such differences in the space between, on one extreme, Bitcoin, which is a non-government storage of, kind of storage of value, much like gold has been for years. It's kind of non-government controlled versus stable coins such as USDC, which are really, backed by a US dollar, have the price stability of the US dollar, and are much more payments companies. So, it's possible that, what Jamie Dimon is talking about is referencing Bitcoin. His view is it's worthless. I don't think it's the view of the market. But on the other hand, if that were true, you still may have a buoyant market in payments by using a digital version of the currency. So two very, very different markets.
And you do have some skin in the game on this, we should say, at this point, in terms of the
Yes.
stable coin side. Maybe tell us a little bit about your investing in Circle and why you've gone down that route and what potential you see there.
Sure. So we did our first issuance of a SPAC, Concord Acquisition Corp, in December of 2020. And I think it was July that we announced a merger with Circle at a valuation of $4.5 billion. Between January, when we began conversations with Circle, and July, we had done a private investment through our private equity fund in Atlas Merchant Capital, as it was not at that point ready for public listing. There were a number of things that Jeremy Allaire and the team did, including recruiting and attracting Jeremy Fox-Geen as a CFO, and a number of other things. So in July, we announced the merger. We're very, very excited. I think the markets tell the story, which is that.
So maybe just for anyone listening who hasn't or watching who hasn't been following Circle, if you could briefly maybe tell them what Circle is and what Circle does. I mean, it's one of the world's biggest stablecoins, I think it's fair to say.
Yeah, it's a stablecoin. Tether is a stablecoin, and they're different. Tether right now is larger in terms of value outstanding. Happy to go into some background there. Circle is USDC, which is US digital coin. To put it in context, it's a digital version of the US dollar. It's backed one for one. Each coin is backed by a dollar. We announced in September that our portfolio was moving even more toward, the highest possible quality. So the portfolio backing each USDC is cash and short-term US Treasuries. If you put it in perspective, in 2020, as the year began, there was about 400 million in USDC outstanding. At the end of 2020, it was about 4 billion. So coming into 2021, when we began discussions, it was about 4 billion outstanding, and this week it surpassed 32 billion in USDC outstanding. And one of the things that's really striking when you look at the numbers, if you look at the outstanding in Bitcoin, less than 1% of Bitcoin has been used for a transaction or payment, if you will. With the 30 odd billion outstanding in USDC, there's been over 1 trillion in transactions. So that really screams the difference between one is a store of value and the other is really a payments business. So our investment in Circle, Laura, was very much around payments.
And why is Circle useful?
So if you look at the commercial aspect of it, and particularly, I think payments for consumers with PayPal, with Venmo, with Starbucks have been kind of technology has kind of won that race a while ago. But when you think about commercial transactions, so between companies, the ability to transact large sums of money with the internet, it's now instantaneous, it's 24/7. With blockchain, and USDC goes over a number of blockchain rails. With blockchain, it's secure, so we no longer need an intermediary, a bank or a credit card company charging 2 to 3 points. And it has the stability of the U.S. dollar. So fast, stability of the U.S. dollar, secure, and we're driving the costs very, very close to zero.
So it sounds like you think that Circle and other coins like that are going to ultimately be useful for society by making business easier, by taking out friction. Is that how you see it?
Very much so. I mean, I think when you think about the value to society, to businesses, to governments, the ability to transact, efficiently, instantaneously, less expensive, and secure. I mean, how can that not be good when that's taken in total?
Well, I guess maybe if you were sitting in your old seat, you would think that was not quite so good since it's quite a lot of what the banks do and what the banks make money from. When you think about the future and the risks to the sector, I mean, if banks do lose a big chunk of this business, are there knock-on effects of that which could be damaging for society? If banks lose their most profitable business, if banks lose the payments business, does that threaten their model and their ability to perform a societal function?
No, I think the competition is very good. It has been on the consumer side, and I think now it will be on the commercial side. I think banks are here to stay. There's an incredibly important role they play in terms of taking deposits and providing credit. But we all recognize that the impact of technology and the impact of specialist platforms is taking away many of the more profitable sectors of the business. If you take some of the non-core businesses out of the large legacy banks like investment banking and asset management and look at their core legacy deposit lending businesses, those institutions are becoming more and more like utilities. And I think in many ways that may be exactly the direction that the regulators would like to move them. Very, very, excuse me, very, very safe, but less mobile, less innovation, less agile. And I think we're seeing that with financial technology and companies like Stripe. I think we're seeing it in consumer payments with PayPal, with Venmo, with Starbucks. And I think going forward that there is a kind of soft underbelly of the large legacy banks in terms of international cross-border payments, corporate treasury and transaction services, which I think will have to compete with firms like Circle.
And we think about what else might be competing with firms like Circle. There's a lot of talk about central bank digital currency, the idea that you would have official digital currency. The US Treasury might do its own digital dollar, the ECB might do a digital euro. If we have central bank digital currency, do we still need private digital currency?
Sure. And as we look forward at the future of USDC, Laura, we can see it operating alongside central bank digital currencies, and we can see it operating in a highly regulated way. So let me take a few minutes on this because I think it's critical. The FedWire, Euroclear, none of these things were developed by the central banks. They were developed by the private sector, and then highly and effectively regulated by the central banks. We think there is a real opportunity in the U.S. with USDC for the dollar, for the regulators to allow that development to happen in the private sector, but to be highly regulated. And in that regard, there's a big difference between some of the stable coins like Tether, which is kind of a murky, Chinese offshore, non-banking, unregulated questions about what is in the portfolio behind the coins, versus Circle, where we have announced our intention to apply with the OCC for a full banking license. We have announced in September, as I said, a movement in the portfolio that we have to just cash and short-term treasuries, a real rigorous and publicly produced auditing on a regular basis. So we actually embrace regulation. We believe that the current regulation for payments companies like Circle and like Starbucks and like PayPal tends to be within the states. So we follow all that regulation amongst the states in the U.S. But I think that's why we hear so much talk recently about potential regulation. The truth is we need that regulation at a federal level. And I think it would be a positive for the market, for crypto and for stable coins. And particularly, again, we have skin in the game for Circle if we did have some effective, smart federal regulation.
So I totally get that point, but it's somewhat to the side of the idea of the central bank digital currency, which isn't just regulation, it's the idea of something which could compete with Circle, which something. So
Yeah.
if I have a choice, I can have a USD Circle, which you will back with dollars, or I can have a deposit directly with, or I can have digital money directly with the ECB, with the US Treasury. Like, why would anyone pick Circle in that situation? Or do you think that that's just that the central banks are not likely to be available to individuals as stores of their digital money?
So, you see the model in China where the central bank there is doing a digital yuan. I don't think there's any reason why the US or the UK or the ECB should necessarily follow the model of China. I think they may follow a model where the private sector develops and the central banks regulate. On the other hand, if any of those central banks decide to compete and have their own digital currency, we're very comfortable operating in that environment as well. And I think that'll be a consumer choice. But certainly, I mean, it's a bad example probably, but the government still owns the post office, but it has not impacted FedEx and other private sector players from improving service, creating competition, and taking some of that business away from the government. So it's by no means a perfect analogy, but the point is we're quite comfortable going forward operating in either scenario. The Boston Fed and MIT just came out with a white paper. I think it would be years and years and years before the central bank in the U.S. would be prepared with all the work necessary for that. But if that is the future, we can operate in that environment. But we can also operate in an environment where the central banks are the regulators and the private sector is developing the product, within that regulatory framework.
Okay, I'm just going to invite some questions here. So I just want to say again, if anyone has any questions, please do put them in the chat. We'll come to those in a few minutes. So we talked earlier about how there were both useful and less useful applications of some of these of this tokenization. So Bob, what's the most useless application you've ever seen in terms of crypto and tokenization? The thing that you've looked at and said that serves no purpose whatsoever. What are they on?
I can't think of one, Laura, that is totally useless. I would say there are some that I haven't paid as much attention to because they don't kind of resonate with me. So, looking at some of the things that have happened with NFTs and art, since I'm not very sophisticated in the whole place of art, I probably haven't paid as much attention. But I think all of this is incredibly important innovation, and taking advantage of the incredible opportunity presented by the internet for financial services, and taking advantage of the incredible opportunity presented by blockchain technology. That's really what this is all about. If you can imagine, a company in the UK doing a large commercial transaction with a company in the US, then traditionally that transfer of money, a substantial amount of money, would go through an intermediary. That's the only way to do it successfully,
Yeah.
and that would be a large bank or a large credit card company. And the price for that would be 2 or 3 points. And the day of that transaction would be 2 to 3 days out, probably on a Wednesday or Thursday, sometime during midday. And now you're going into a world where it can be instantaneous. It can be on a Sunday evening. It can be 24/7 and instantaneous when it's done. Highly secure without an intermediary because of the blockchain technology. And the cost is being driven, from 2 to 3 points close to zero. This is a very, very, it's very important development.
So, how big is the risk that some of the more frontier applications of tokenization and of crypto, some of the ones who are not actively seeking regulation, the ones who are actively seeking to avoid regulation, to promote privacy, to potentially facilitate crime, how big is the risk that they ruin it for everybody else? That there's some kind of big blow up in the murkier sector of crypto, which then leads to a ton of regulation that stamps out everything else.
I think you're going right to the crux of why at Circle we're embracing regulation and encouraging regulation. I think for the users of digital currencies, having a clear regulator and a clear regulatory framework will only improve the efficiency of the market and help people make a decision of whether they're in a safe space or taking risk. So obviously there's a wide range of operators in safety, and I think a clear, concise federal regulatory framework would be a real positive here. I think we're encouraging that.
And do you see any risks then to the growth of tokenization and crypto? And what are those risks if you see some?
Well, I think the biggest risk is, do we get, this is going to sound so obvious, but we embrace regulation, but we want smart regulation that's providing the right, the right safety marks for those users, but at the same time encouraging innovation and encouraging the development of the market. I think that's the single biggest risk. Obviously, we're counting a lot on the new technology and blockchain as well, which we have spent a lot of time understanding. But technology is a risk, regulation's a risk, and those are the things that we focus on. Those are the two big ones.
And how do you think about the green agenda and the amount of energy consumed by blockchain and the potential risks around that?
I think you have to take it in its totality of what it's doing to improve efficiency and
So you don't
cost.
see green risks, or you think that the increases in efficiency are so great that it's worth the energy consumption?
Well, the energy consumption in all different pieces of this are very different. It's very different in Bitcoin versus
Yeah.
stablecoin, as an example. But in answer to your question, do I believe this has to go through the same filter for ESG as really everything else that we're developing? Of course it should. And I think one of the tricks in focusing on ESG is getting appropriate scorecards so that we can really, make the proper judgments. So I absolutely endorse that should be one of the filters that we're looking at. But again, it's another example of it's very different across the piece of crypto. Not every crypto is the same in terms of energy consumption.
Got it. So if you were back in your old seat running a big bank, is there anything banks can do to not just miss out on this and to not just get like bypassed by crypto and tokenization? Can they get in on it, or is it just too restrictive from a regulatory perspective, and are they just going to effectively have to watch this happen and lose some market share?
On the one hand, it's a real challenge because I think the legacy banks have, decade and decade and decade of archaic technology in terms of processing and development. On the other hand, I think some of the most sophisticated banks are really engaging, and so it would be interesting to see a bank adopt USDC as a payments mechanism on their platform, the same way that Visa and MasterCard have. And I think that's the direction we're going in. I think there's another potential direction which we're seeing more from JP Morgan, where they're investing or buying or acquiring fintech companies. So I think there's been a couple in the US for JP Morgan, And I know there was a Nutmeg, I think it was, which is kind of a robo advisor in the UK. So I think there's a number of ways that the banks are beginning to engage. But I think most importantly, the banks need to accept that the impact of digital currencies in terms of efficiency and in terms of the advance in technology are real, and they're going to have an impact. So embrace that impact. And that can either be by adopting some version of stablecoins as payment mechanisms on their platform, and maybe a combination of that with investment in fintech.
So, do you think, given where you think stablecoins are going to go and how useful they will be, is it still worth investing in the current banking payment rails, which they have been trying to speed up and fix for years now? Is it still worth trying to make that better, or will that just be replaced?
I think it'll be replaced. I think if you look at the challenges, again, take away the investment banking business, which is buoyant for those banks that are involved, particularly the US banks and asset management. But really, if you focus on the core, taking deposits, providing credit, that business is being really, really challenged by costs, as we saw in the most recent earnings announcements. It's being really challenged by a reduction in loan demand. But most importantly, it's being really challenged by Stripe and credit cards, by stable coins and payments. So the impact of financial technology and specialist companies, particularly specialist companies with a financial edge, is really showing up. One of the numbers that I look at, Laura, is around the time of the financial crisis in 2008, if you looked at the market cap of the financial services industry in the US, it was dominated. About 95% of the market cap was the legacy banks. Today, that's about 70%, and that's the impact of financial technology specialist operators.
Okay, I'm just going to call again for audience questions. I'm not sure if we've got a technical issue. We don't seem to be seeing any at this point. It may be that the audience is just not asking any questions, but if you do have any questions, we've got another few minutes where we can take some. For the time being, I'm going to ask Bob about his personal views around stablecoins. I mean, do you personally hold stablecoins? Do you hold cryptos? How do you personally view it as an investment?
So, stablecoin, yes. USDC, of course. I'm an investor in Circle. I had this debate with my partner at Atlas Merchant Capital over the years on Bitcoin. And he didn't convince me that it was a great investment, but he did say that, some small percentage of your disposable income should be invested in Bitcoin, and he did it. So he's the winner between, I may not completely understand the value dynamics of gold or Bitcoin, but I know my partner's done a much better job of allocating his resources. I've never bought a Bitcoin, so I'm the loser.
And have you ever taken part in anyone else's initial coin offering?
No. Other than Circle?
Yeah.
No.
So other ICOs. And how do you see those progressing? Do you think ICOs are still the future of IPOs?
Listen, the impact that we're seeing, it's hard to go a day without recognizing the impact of technology in the whole financial services space, but it's going beyond that as well. I mean, I think the question that I ask myself is, the impact of the financial crisis in 2008 in terms of the higher levels of capital, greater safety of the banks, ring fencing and whatnot. Why has it taken this long for technology to truly be impacting, large sectors of that industry? I think we're in the very early days of that.
Okay, I think we're going to have to wrap it there actually, because we are just almost out of time. So thank you, Bob, very much for your time. Thanks everyone for listening in and for watching, for your attention. The next session will appear shortly. It's going to be talking about the consumer experience in banking, moderated by Liz Lumley, technology and transaction banking editor at The Banker. And the others will be available online for the next 30 days. Thank you.